I dance, make it hurt.
What's up, real illustrators? It's your host, Surreal.
And Juan, and welcome to episode 13. We're going to be talking a little bit about changing market conditions. We've seen a lot of constructive price action the past couple weeks, right?
Yep. Yeah. Good rally off the lows, like crazy rally.
Yeah,
Um, I mean, the market was coming in, the past couple months, really correcting, and then like those lows started to really hold on, and then price was tightening and just shot out like a cannon. I don't think like most people were expecting this rally to just keep pushing and pushing.
it's kind of like that. What is that, like that metaphor that I've read about from Minervini, where you kind of hold that basketball underwater, and then
Oh
when you
yeah,
finally
yeah.
when you finally release that pressure, just
Yeah,
bounces.
shoots up.
Yeah, it
Yeah,
shoots
yeah.
up. So it's kind of what the market's been doing there for the past week or two. I've also seen a lot of constructive price action in terms of a lot of the stocks that look like they're going to be true market leaders and that are leading these rallies. They're kind of separating themselves from the indexes.
Yeah, it seems that way. I'm really curious to see like how this cycle like plays out. Like if we just kind of skim those lows in the overall index, because like they're kind of coming back up to their moving average, the 200 and some key levels on the indexes. So, but like you said, there's stocks that are definitely like, leaders that are showing like really good price action. So it's really going to be interesting to see like what the indexes do from here and then keeping an eye on those stocks like um we'll get more into that when we talk about the topic, but it's just really like there's some definitely some divergences with what you're seeing in certain stocks and sectors versus like what the index is, what people could think they could do now that they're getting back up to these levels and key moving averages.
Yeah, definitely been an interesting shift in the market period. Compared to what we've seen in the past couple of months. And I think it's really interesting for us as newer traders to see these shifts, because 2 months ago we saw a shift from this, from the type of market we could be transitioning into right now, where it was like that constant rally. The stocks were separate from the indexes. They weren't really, like the true market leaders were showing their true market strength. And then, they were rallying and, basing out, giving us, opportunity to position ourselves. And then they would, come out of these bases and go for another rally or whatever.
Mhm.
And then we kind of transitioned into that period in the market where we got these really volatile intraday swings. Things would gap up and gap down heavily day after day.
Mhm.
Gap up, get sold off into supply, or gap down, and then they would rally crazy just to get sold
Mhm.
off into at the end of the day. It was gnarly to see that
Really.
transition, and then
Yeah.
we're seeing this transition, potential transition back into that market that we were at before. So as newer traders, to see these constant, that this transitions twice the past couple of months, it's a ton of learning opportunity, I think, for everybody in the market. But especially for us as newer traders who take trading seriously. Because I definitely take trading seriously. Um, it's very very interesting to see these changes in market profile.
Yeah, and like you really got to be aware and like look at charts every day and really stay in touch and keep your finger on the pulse too so you can pick up on these things cuz like we think about like how kind of tough it was from that December period to pretty much just what like a week ago, mid-March, earlier March, and like the things that you would have to do to be able to like contemplate taking a trade, with our experience level of going through like a first like major correction like this, like the tactics that you had to utilize were completely different than when you get into like a trending rally or if you get like a nice rally for a week or two, where you really want to if you're a swing trader, um or even as like down to a scalper like you want, like knowing or being aware like, oh, like we're starting to like trend if you're in a stock that has a trending day, you know, before, in the bearish, heavy bearish type of environment where you couldn't leave anything on to really trail, being aware of the transition and like making that self within your rules and tactics, like saying like, okay, like maybe I can take a little bit more size if the picture's clear
Yeah.
and leave some on to trail, or if like me as like a swing trader where I couldn't, really find anything to swing through that 3 month period. And now we had this huge rally. It's like, okay, like, well, I see like Nvidia, which I know is a strong stock, coming through like a pattern or consolidation area and it's ripping, like I need to find somewhere to get on and then be aware enough or have like hopefully, through this after seeing this, have enough experience to be like, hey, I need to hold for a couple days, or this is gonna trend. Like, so I'm not upset about missing the rally or anything like that, but more so like using it as a learning technique of like being
Yeah.
aware of the transition now and really paying attention, like, oh, what is the market going to do from here? Because if I can start swinging again, I need to have the stocks on my radar. I need to have the patterns, set up, and I need to have my focus list ready. Because if the rally does play out and the market consolidates, I need to, for my style, be ready to transition back into swing mode. You know what I mean?
Yeah.
Or be quick that if I do put some swings on and I'm not getting that good feedback from the stocks, that I may need to tone back my size or my frequency and like, hold up, let's see what the market wants to do from here. Cause we could easily go right back, you know what I mean,
Yeah.
into that bearish mode if we start selling off again. So it's really just, I feel like through these corrective periods, you got to really be aware and then like try and gain the experience and the knowledge to like transition to which tactics you're implementing within your own strategy.
Yeah, definitely. And I think you're going to talk a little bit about this, especially you as as a swing trader. As we've seen this transition in the market period, you put on a swing, and it's been working for you the past couple days, or
Yeah.
the past week, right? I don't know when. I don't
Yeah.
remember exactly when is you put that on. So I'm excited to kind of hear about that because that's,
hmm
just that in itself tells us there's been a shift in just like the market profile overall. So. Um, if you don't mind, we can kind of go into sharing kind of our week and how it went.
Yeah. You want to start us off?
Yeah, yeah. Let's move on over. So I really want to talk about a couple things. I didn't have a super hot week. Honestly, think I over traded a little bit, and I think come yesterday, I broke one of my sacred rules, and I took an L for it, which I prefer over taking a win, because I don't want to break a rule and take a win. That's just gonna build some bad habits, especially if it's a rule that I put in place for a reason, right? I took losses on it before. I kept taking continuous losses, and so I set the rule to protect myself from those losses, right? And guess what? What happens yesterday? I break my rule and I take a loss. So
Hmm.
I want to talk about. We've been talking about the market profile change a little bit. This was interesting. I took Snapchat twice this week. One was the first small loss, but I'll show again how I kind of worked out here anyways. But I had a demand zone marked out. I believe this was Wednesday. I took this demand zone off of Snapchat. On Tuesday, it had a really nice rally and it created a demand zone near the bottoms. This thing opened up near that demand zone, and it just kind of chopped around there for a couple minutes. Came in and touched that demand zone. I had an alert set. This wasn't like on my main watch list, but I had the alert went off, and I went to go look at like how it was reacting, and it looked really neat. So I was like, okay, this has a good risk to reward profile here. Like any close below the lows, and I'll just get out. And I took the trade here, anticipating just like a break. My goal here was just take this on that bounce, aim for high a day. That was my target. We haven't seen a whole ton of follow through, so I took two very small contracts on that bounce, and I said I'll just let them go into percentage gains, right? And so that's exactly what happened. It bounced nicely. I think I let one go right under 20%. I think I let the other one go at like 35%.
Mm,
I took two contracts. Like I said, they were very small contracts. They kind of added up to what I would take one contract on, anyways.
mm,
The premiums on Snapchat options are really nice and they move really well. So I was okay taking, two contracts there. And so I kind of let them go mostly into these two candles, kind of aiming for those wicks at high day. I didn't want to actually wait for a high day because we haven't seen a whole ton of follow through before. And I'll just I'll keep this in mind going into newer trades as we talked about that profile shift in the market. Because now that I've seen that follow through, I'm gonna kind of not hold out for the next couple trades, but I'm gonna be on the lookout to see if these trades are gonna start giving me more follow through, and then
More,
I can
yeah,
leave a runner or I can hold that contract a little bit longer because I know it's gonna give me follow through, right?
yeah,
So I did get an average gain of about 30% on on these contracts. And as you can see, this demand zone acted really well. I mean, it came in here within what 10-20 cents, and then it bounced for like $2 full, which on
mhm,
Snapchat, $2 full. I mean, you're talking about 5 or 6% on the stock. That's really good. So this was I think this to me really brings in that profile shift that we've spoken about so much here,
mhm,
because the man zones a month ago, I was using as places to take profit from
mhm,
supply, right? Stocks were getting sold off into these demand zones, and it would just kind of bottom out and base out the rest of the day at these demand zones. And I would really take this is where I would really take a profit and just kind of watch price action the rest of the day. It's not a place that I wanted to get long at. And
yeah,
now it's reacting really well to these demand zones, and
yeah,
I'm seeing the follow through here. The next day I also took this rally from the previous day created a demand zone, and I actually took the bounce. The demand zone was around this area. I took the bounce here, and the contract started turning up nicely, but it did get sold off into here to go back to the original demand zone. And then it bounced the rest of the day. Same bounce we're seeing. That's 2 consecutive days of really good price action. Honestly, in my opinion, the same demand zone was used twice, and both had really good reactions to it. And at any point, I could have taken another bounce here at Snapchat, and it would have worked out really well. So this is just something that it's in the back of my head moving forward, and it's
yeah,
something that I really want. Even if we need to consolidate next week, this is something that I really want to see hold in the market if we're gonna really transition into a
the
temporary bull.
characteristic
Yeah.
of, yeah.
So
Yeah, and that's where like that's like where the topic kind of comes into is like being aware within your setup of the market like context or its characteristic like changing of like what's working throughout the day, especially with you being on the smaller time frame. Like and timing it as well because if you know we're at the extension of a big rally, you're like, okay, pullback time in the indexes. So like majority of stocks, like they may hold well, but they may just kind of churn and then waiting for that next turn up in, specific stocks. And then you being aware of that in your setup and then being like, it's time to size up. Like it's time to throw 2 or 3 contracts on. It's time to finance some of my gains maybe that I've made or really press the gas once you get that feedback,
yeah,
and
definitely.
timing that with like I think that's where you're really going to get that equity curve like but that's something that you're aware of and like now you just got to like focus, get some feedback from your trades or what you're seeing and then when you see that setup happen, no, you know what I mean, be like okay, I'm bumping up size here or I'm looking to like be a little bit more lenient with it when it gets up there. That those are
Yeah.
like that's the transition we're talking about.
Yeah, 100%. And I think it's I really like it. I mean, we haven't seen this type of market in a second. So
Mhm.
if this market is gonna give us that shift, then I'm gonna take advantage fully
Yeah,
of it.
as you should. You're prepared and you're aware, and now it's just time to focus and pay attention for the signals and then execute when they come. And you're
Definitely.
up on the year too, so like if you really think about it, if you start getting feedback on that and be like, oh man, like Snap that day, I remember you took that trade. Snap kept going through its opening range highs, and you essentially caught the bottom on that entry.
Yeah.
And so like, you used to, I remember, and I'm just gonna make a comparison here. I remember you used to get so upset when they would run further, and then we talked about like the compounding and it's not about that, it's about getting your average gain, or double your average loss.
Yeah.
And you've gotten so good at that. And now look at this base you've built of being up 30 something percent on the year. And like, what's to think about it if like you get that feedback for taking a little extra risk on the next high probability trade you see, going 2 or 3 contracts to risk, 2% of the account, 3% of the account to just see if you can, if the trades are telling you that and the market's telling you that and you see it the next time and you have a really high probability setup, maybe it's not that big of a deal throwing a little bit extra risk to get some of that feedback. If the
Correct.
feedback knocks you
Yep.
back, okay, hey, bump it back down one contract, like, and but you're going to gain that experience, but you're pushing your comfortableness with size a little bit more because I know you said you really wanted to like push your execution and sizing a little bit more
Yeah.
eventually. So that could be one way to look at it. Like, hey, what's 2% off the top of the account? Like
Yep.
really to just get comfortable. Even if it's a loss.
Yeah, yeah, 100%.
Um, so that's going to be really interesting to see. I really think you're going to like execute. If the market holds up, we'll see. But I'm excited to see you put on some bigger winners, and you already kind of did with this 35%. I mean, you bumped up to two, and like exactly what we used to talk about like several months ago. Like, hey, sell it into strength, backstop average gain, and then you actually sold the second one higher. So it
Yeah,
worked out. Perfect example. That's experience that's going to stick with you.
definitely.
I think that's awesome.
Yeah, I felt really good. I mean, this one, even seeing the follow through after and seeing that it
Hmm.
did work out, and I mean, maybe I could have held longer. It's fine. Like I feel okay here.
Did did
And
you? I just have a question about that too. Did you market sell it into strength or were you trailing?
no, I did market sell into strength.
So you okay? So you market
Yeah,
sold.
yeah, I market sold it into strength here.
Yeah, because you could have left a backstop on it and just said, "Hey,
No,
I'm gonna
you're
go walk the dog real quick" or something.
yeah, no, 100% could have like this thing.
Yeah. Something
Uh,
to think, but that's the character. That could be another thing too. Like if you think like, hey, I got a runner on backstop, right where I sold the first one, and let's see what happens.
yep, yep.
Interesting.
But you kind of want to shift us into swings a little bit?
Sure. Yeah. I'll go over one that I entered. Let's see here. Uh, Pretty boring stock. John Deere tractors.
Tractor boy, that looks like a rocket ship. Look at that.
I know. Here's the monthly. Yeah, I'm not gonna front. Like I got this one off Twitter off somebody. I had seen this base before a while back, but I wasn't tracking it or anything. But I saw someone posted on Twitter. I think it was Randy. He's with Dan Zanger, who's like a famous swing trader. And I just saw him mention it. Like it had a nice base, but I mean it's a setup I trade the range breakout, and on the monthly we can see it's super clean. I mean you can see it came out of here out of a base back in what is this 2000 May 2020. So that was kind of the rip off the COVID lows. And then I mean from early of 21, about this time last year, it's formed a nice flag, for about a year. And I mean, look at the monthly this month. It just broke out. I have my entry marked here around 402. And when you put it like that and you kind of compress it, I mean, it just looks, this is where the imagination has to come in. It's a measured move off a flag. So we can, we got an idea of a box I'm shooting for here. It's not a for sure thing, but like this area right here, 61% to 100% of the original flag is a good way to shoot for. And then I kind of saw like this nice 45-ish kind of degree angle here. So it's kind of like a nice little channel to kind of watch because if this makes a move out, like it's going to have to rest at some point. So I'm thinking like logical place where it could run into resistance, right? The 500 mark,
Yeah.
right? And look at this monthly bar. It's already from 360, it's already at 100 points up here. This thing could use some momentum, maybe overshoot the 500 and then we get a little congestion in here. That's what I'm going to be looking for. And then we'll see if it can make the push up here, where I can kind of like really start aggressively like trailing the remainder of my position up in here. I don't want to get too far ahead of myself, but I'm already into nice little profit. I took half the position off into strength just because of the market conditions, like very quickly actually. So I'm not like stressing at all with this. Like I'm gonna give it room and let it work. And the volume down here is nice. Look at this nice increase in volume as it's coming out of the flag here. So from a monthly perspective, it looks good. Dropping down to the weekly, you get a little bit more volatility in the flag, but I mean, look at all the 50 caught up, really consolidated here. All the moving averages tightened up. One thing that I have noticed about this, I was looking at this chart one, and I know I've talked about it before, like the slingshot thing that I've seen,
Yeah.
where a lot of these stocks will, and I think it's something that like I don't know if institutions do or if it's like algorithm. I'm not trying to like be like tinfoil hat man or something like that. But it seems like it's an interesting tactic where like the market knows that people that more and more retail are like aware of these types of patterns and like where the liquidity is. And it's almost like this method of like a slingshot, I call it, is like it's basically essentially right before something breaks out in these larger patterns, it's like they like to shake. It's like they like to do a shakeout right before it rips. And I've seen it in a lot of stocks, like AMD and Nvidia. If you kind of go back to where maybe they had some of these aggressive consolidation patterns before they made big moves, they just rip it downward right before it takes off. And you can see it here on the weekly. Like you get like a perfect range here, one test, two tests. The third test, this is a totally failed breakout here. Like, look at the extended volume here,
Yeah.
the selling volume. They sold it down right through the 50 hard 2 weeks in a row. It reclaims the range right here perfectly. And then what does it do from there?
Yeah, rips.
Rips back
Yeah.
out. They actually back test again all the way down to the 50. But this again is on the weekly. So, you drill down and look where they closed it too. The buyers closed it all the way back up outside of the range right there. And then they even back tested it again on the third week. This is like the nuance type stuff. Perfect back test of the range.
Yeah.
Drill down to the daily, and things get a little bit more messy on the daily in these larger types. But you can see it. False breakout, just straight down, ripped it, shook them all off. And then something really interesting here that I love. Straight down, ripped it straight back up, and then you get a nice VCP pattern off this. You get this leg down, right? Let's see here. Let's measure it out. 18%, 10%, 4%. You get a nice, a tight VCP pattern. It's very tight because it's on the daily, but it's telling, right?
Oh yeah.
They're shaking it out, and then the buyers start tightening up, and then it gets real tight right in here. And on the 4 hour, I mean, it gives you a beautiful little range there.
Yep.
And right here, I mean, after this three move out back outside the range, 50 started sloping up, EMAs are coming out, and then you get the final push out of that. That day I was actually watching it and I bought it a little extended because I wasn't watching it early in the day. But I mean, let's see if I can pull the 15 up just to kind of break it down. That's not far enough. But it's really interesting to me to like kind of study these patterns and like how they played out. Like, I mean, once it came out of that flag, I mean, look, it all day long, and I bought a little late, and then that just it just finally went. The sellers let off, and it's just drifted up every day since. So
Good
I'm up a
close.
good
Good
amount on
close
it,
on
and
the
I'm just
weekly.
like, yeah, it closed great on the weekly. Every day it churned up. It's got kind of tight. It's not even really getting extended on the daily over here either. Like it looks a little aggressive here, but like I mean, this could just consolidate sideways, cool off, and then go higher. But like this is one of those patterns where it's such a big pattern and it has so much potential. You got to kind of look at it from this point of view.
Yeah.
Like, look at this churn out. It never closed below the 8 EMA on the weekly. And then look at these two big green bars, like comparative to the original flag.
Yep.
Like that's strength. It closed right at the highs. Like this could go another week. And like I said before, it could get to 500 before it cools off, goes sideways, let the MAs catch up, and then you know.
Yeah.
So we'll see. Like this is gonna be like it's just so nice to not stress and just kind of let it work. I'll let it when the first pullback comes in. I'll move my stop up under the main pullback as it turns back up off that first pullback. On the week, typically the first pullbacks in an aggressive breakout get bought up. So it feels good. It feels good to get a swing trade on because I love stocking something, entering properly, and then just having it work and just letting it work for me and not stress about it.
Yeah.
And just move my stop up at when it shows me that it wants to continue and put a pullback in, let it work. So,
I think the even seeing like your swing trade here is telling us a lot about the market shift too. This transition period we're seeing in the market.
mhm.
You know,
Yeah,
because
and
we
I mean,
you wouldn't have done this, a month ago. I mean, this, with the way the market kind of was acting and stuff, like it was way too volatile. A lot of stuff was happening for you to be able to do this and for you to see constructive price action, in something like DE. Um, I think that really tells us about the transition we're potentially seeing here in the market.
Yeah, and just gotta be aware and like and some stuff may work. Like swings may continue to work, and we just gotta be defensive, but also if something's working, like be patient with it and let it try and give it as much room as you can to let it like work for you as a swing trader. And
Yep.
be aware of like what other stocks that are setting up. It comes back to the patterns on the individual stocks because the good ones are going to go. They're really going to go if the market's going to work. And some of them may still go even if the market fails. So there's still opportunity to be there, but you got to be aware and kind of like know when to shift gears. I feel like, especially as a swing trader, where I was like doing more shorter time frame stuff, like selling quick into strength intraday and and stuff like that, versus like, okay, let me see if I can start find some better patterns and get some more longevity in these trades on.
Yep, definitely. I think we can transition here into our topic for the week, which is, transitioning. I mean,
Mhm,
as we've spoken about all episode, I think it's very important that we are situationally aware, as we've spoken about in previous episodes, and to really know what type of market we are in. What is
mhm,
what is working, what isn't working, and how we can use that situational awareness to trade better, to trade more properly, even if you have to do a little bit of rule adjusting, if you're like, okay, I don't have to sell that quick into strength. I don't have to scalp this play. I can follow it with an 8 EMA. I can follow with the 20 EMA, whatever it is that
mhm,
that you want to adjust it to. It's very important to keep those little, like we've spoken about, those little nuances in mind, right?
mhm. Yeah, I think it comes back to your tactics and rules, and that's what I'm working on right now. Is like I've been so discretionary in my learning because I'm still so new and I don't have a set process because I'm like so open. You hear so many different things from good traders, like, oh, you should do it this way or this way or this way. It's like I've kind of been like I understand those things and I've kind of been mismatching, but like now for more of a consistency phase that I want to shoot on, I want to have like, and you know me, Juan, we've talked about this. I need like boiled down, refined, like two or three options. Like, hey, when X happens, you can do either Y or you can do Z.
Yep.
And by doing that, and those rules are are there to protect the downside and also protect when you have a decent profit on the table. And so, for example, for me, it's like in a shorter time frame market, I want to be maybe selling out instead of like, we talked about, I was like, oh, I should be selling half my position at 2R and then backstopping 25% at 2R. But in a bear market, like we were, you know, in those shorter time frames, I need to be selling maybe 80% or 90% of the position above 2R and
Yep.
not giving it any room. And so having those rules, like it's hard when you're newer to kind of have like a really focused set of rules. But if you have a good strategy and you have ideas from other traders or somebody who's maybe mentoring you, like I think the focus can help if you find that it's working, but also be open to when the transition in the market happens, like having some other rules that are going to give it more room, you know what I mean, to
Yeah.
work for you in whatever time frame you have. Like flexible, being aware, and then coming back, I guess, to the process and refining it
Yeah.
um, over time.
Definitely. And I think it's very important, like for example for me like refocus in on my setups with this transition too. Key level breaks, key level breaks I can have. It doesn't have to be a scalp anymore. Even though I am a day trader, right? I could trend follow all day if it's going to give me constructive price action. I don't have to sell into strength immediately, right?
Hmm.
Um, Demand zones are working with follow through now. You know what I'm saying? Supply zones. Now I can kind of flip what I was doing. Right, I was doing supply zones and then selling into demand. Now I can flip and be like, okay, I'm factoring buyers in. Demand zones are being created now. Use these demand zones as consolidations. It comes back and retest that breakout. I can use those demand zones as places to get long instead of places to sell my shorts, and then use the supply zones as places to potentially sell into strength. Because we created a lot of supply on our way down, so now I can just use that supply as places where my plays are going to potentially consolidate before moving higher. So I think it's just keeping like those little things in mind, knowing, okay, now my demand zones are going to work. Now my supply zones are going to be just places where I'm going to sell into and not, actually sell and go short. Like that's not,
Hmm.
it's not going to be like that. So just being aware of those little nuances and just focusing in on your specific setups and knowing what is and what isn't going to work is very important.
Yeah, and it's like tightrope walking too. I feel like you don't want to lean too far to one way or lean too far to the other because you're gonna get stuck. It's more so like just being aware day to day what's working in the market, and then what are the probabilities of like what does the market look like, or what do your setups look like, or what have your recent trades telling you to where like okay, like hey, this has the potential to kind of like push another couple days. I need to really look for that day where I think we could make the big move or having a daily trend and really time like be aware of the tactics too, but also the timing of what days to put those into practice as well, you know. And it's not really more so fortune telling because I feel like the more you watch the market, you kind of really get a good idea of what the probabilities of it's going to do that day. Like, hey, we're probably going to churn today, or you know, oh, I could see us like bouncing today, like having a really big like rally day or something like that. So kind of having those tools in your back pocket of like, okay, if I have conviction in a demand zone here on this stock and it looks really good, like it could make a big move, and then you see it come into the demand zone and your demand zone setups there, like if you have the idea that it's going to be a big trending day, maybe put an extra contract on, you know, and then be aware like, oh, I'm going to backstop. So it's having those tactics ready to go already in your process, and then just knowing when to kind of start implementing those based on what the market's telling us, what my most recent trades have told me. That's kind of how I'm picturing it, at least too. For me, it's a little bit more elongated with the swings because you know the timing of the actual day, and then having to let it set and ride. You know,
Yeah.
there's a little bit more time in there. But like for you, it's more of a it seems like more of a day to day or every couple days kind of deal because you're able to really make the most of it coming fresh to the market every day. So it's kind of interesting how there's a little bit more like balancing you got to kind of do. But I think that just comes with time too.
Definitely picking up on that feedback, like you said, knowing,
Yeah.
just knowing. I mean, that's why it's so important that we talk about journaling, all the time too. And it's like go back and look at where you sold, look at what the play did after. Why did you sell where
Mhm.
you did?
Yeah.
See if it continued to run. Why, what type of action are we seeing and the trades? Like give yourself, let the trade speak to you, right? Don't make these assumptions and these inferences early on. Just let the trade tell you what it's going to do, what it could potentially keep doing. And if you sold early, that's fine, right? Protect the profits. No, just
Yeah,
just just go back and look at,
and learn.
yeah, learn, see, if the trade is going to continue running, what action did it, they could have potentially have told
Yes.
you in the moment that it was going to continue running. If you sold it into strength, congratulations, like you sold it into strength for a reason and it maybe turned
Yeah.
around into supply. Like just give yourself, let the trade speak to you, let it give it your feedback, give you its feedback, and
Mhm.
then take that and make the next trade based on that feedback,
Yeah.
and then if you sold it too early, don't let it affect you. If you took a loss, don't let it affect you. Just go into it with an open mind and just kind of let it give you its own story.
Yeah, you gotta stack that experience and really pay attention to, like, what the action, within your setup like, you have the setup, which is just a simple entry trigger, it's very simplistic in that sense, but like I heard somebody say like I think it was Stockby that said it, the real separation between like high performing people is like once you're in the trade, like what you do from there and like what are your selling tactics to really get, as much profit out of the trades as possible. And that's where your rules and experience come in because like you have to set rules to really lock in profits at a multiple of your risk. Like you always have to do that. So peeling, meaning selling portions of your position on the way up to not give it any room back. But with discretion and experience comes time where you're going to be able to see, in the market or what price action is telling you, and you're going to be able to just gain and stack that experience to really milk those positions as you grow and become better. But
Yeah.
your rules, having rules to really always have a plan to backstop, to never let those gains turn into a loss, especially once you get above two times your risk. Like that has to be a hard line in the sand, especially when you're newer, because you really need to lock in those gains to build your confidence. But as you do that, like you said, Juan, you got to go back and look at what the trade did after you sold into strength, and that's going to make you better because you're gonna be like, oh look, like I sold half into strength, I backstopped at 2R, but it pulled back right above 2R. It would have never stopped me out. and it would have just kept going instead of me like just like, oh, I don't know what's gonna happen. So utilizing those trades that you already took to really solidify and learn how to read price action better and constructive price action and what you need to see to give it that little bit of room to work harder, come up with new rules to trail. And there's so many options, but it just takes time. And I think that's like really important though, like you said, let the market just be your teacher. The
Yep.
setup draws your attention to where you're gonna start doing business from, but you got to let the market teach you. I like would you say, you said let the market speak to you.
Yeah.
Yeah, that's I'd love that. Like so many people want to talk. It's like you really just everything's in the charts.
Yep.
Your setup draws your attention. From there, you got to let the market speak to you and teach you and show you through price action and patterns and whatever. You got to have something with trend following like a VWAP or key levels or moving averages to help you stay on the ride longer. Once the entry gets you in, you got to milk your position for all you can, but you also got to draw lines in the sand to protect your mathematical edge too. So it's a balancing act, and it's your rules protect you and only help you get better, but you have to study and review,
Yep.
um, to get the feedback so you can get better.
That's all it comes down to.
Yeah. It's really exciting when you think about it like that. Like trading can be really defeating sometimes and it sucks to take losses, but when you focus on a setup and you keep seeing the same things over and over and then you see them like the small changes,
Yeah.
and then those gains start adding up. And I think for you it's really cool to see you like nail some bigger trades, and then they become more frequent and stuff like that. So I
Hmm.
think you're going to start seeing a lot more of that, especially if we get into a good market, like because you're thinking the right things. We're both discussing the right things and we're both getting better too at managing the position.
Yeah.
So it's really exciting. Hopefully we get into a good period of the market at some point this year. I'm sure we will.
I'm
Like
hoping so. Yeah.
we I kind of dropped the ball on this rally, but it's still learning. Like who would have thought that we would have ripped so hard out of there? But next time you see that, we'll know the potential. Like, oh my god, like day one through the descending wedge or channel, whatever you want to call it. It's like I might want to start looking at setups here to get long for a day or two, or
Yep.
really let my trades run intraday or something. So
But yeah,
exciting stuff.
definitely. I mean, definitely a lot of things that we can learn from this rally, and I think just every day that you show up to the market, you're gonna learn a lot.
Yeah, totally.
So just keeping that in mind, and I think we can call it there for this episode.
Awesome, man. Well, it was great stuff. Had fun looking at our trades, and I think this is a great topic. And I think we're going to learn a lot the rest of the year. We already have so much in the first 3 months. So,
Yeah, always
pleasure.
always continuing to learn.
Yep. All right, guys. Thanks for watching. As always, remember your risks, stay focused, be relentless. See you guys next week.
See you.